Good morning, everybody. Welcome to ARMR Investing. I'm Brett Rosenthal. We've created for you a virtual hedge fund experience. Used to run hedge funds for over a decade, been running money for over 30 years. And what I'm trying to share with you are thoughts and processes and techniques that I've learned over that period. For the do-it-yourself investor who's trying to use algorithms to trade, that's what this video is going to be about. Okay, we're going to break it down real quick into the ground rules and a couple key points you have to figure out before you ever start using algos to trade. So at the virtual hedge fund, what we do is we share information on our trading desk all day, focused around the four key pillars of investing success: macro understanding, fundamental research to figure out what stocks benefit from the macro, algorithmic execution, that's what we're going to talk about today, and then risk management rules to wrap it all up in a bow and protect ourselves from ourselves. So let's dive into today's discussion: do-it-yourself algorithmic trading. So you're trying to figure out, is this right for me? Should I be doing that? Should I be even trying to do it? Let me give you the ground rules first, so we make sure we're all talking about the same thing. There are different time frames to trade in. You're going to try to figure out algorithms for each time frame. But the two most important when it comes to algo trading is really your day trading and your swing trading time frames. Then the investor takes that information to manage risk. The investor has a longer time frame. But for the sake of this conversation, for most algo execution, you're talking about day trading and then swing trading. So I spent over a decade, a lot of capital, a lot of time, worked with a partner, and we built all kinds of algorithms using all kinds of technical tools, momentum tools. So there's different ways to look at algorithmic trading. ChatGPT, way before that, you had guys building neural networks to trade. I'm not talking about that right now. That's a totally different predictive model of trading. Algo trading we're talking about is using things that you and I can program pretty easily. I use TradeStation, Thinkorswim Works, anything where you could get a process that allows you to look at a lot of different technical indicators, figure out the ones that work for you, for your strategy, and then write programs for it. So I write in easy language. It's even easier today because you can ask ChatGPT to write the code for you. That's for another conversation on another day. So the ground rules first is to figure out what type of trader you want to be and apply algos for it, day trading or swing trading. And then if I were to give you just a thought off of all the work that I've done, so I could put you on my shoulders and you could jump a little bit higher and not get caught in the minutia. Don't worry. So this is Captain's Log note number 1, days on the ocean. This is for you, all right? Don't worry about the 99 different technical indicators you can use to create an algo. Just find the handful of ones that work in harmony to create a strategy that you're comfortable with. That's what you want to do as a do-it-yourself algo trader. I always talk on this desk about getting rid of the noise. You can fall down a rabbit hole of technical indicators while writing algos. You know, how do I know? How do I know? Because I've come up at the end of a day with a big top hat on. You know what I'm saying? So I want to save you that pain and that time. Don't worry about it. Do your research, do your work, find that out, the indicators that work for you, and then start writing easy language code. Start simple. Or whatever code works for you. The beauty of ChatGPT is I can take easy language code, turn it into Python. It'll do it for me. It's pretty neat. So That's my first thought for you. Take your time, figure out what you're trying to do. Simplify what you're doing. You can be a do-it-yourself algo trader. Just don't bite off so much you get lost, okay? So let's dive now into the second piece of this discussion that I think is very important. You have to figure out which type of investor you want to be. What kind of portfolio manager are you before you start writing algos? And sometimes people put the cart before the horse, okay? This is not easy to do. It's something that I constantly struggle with. I've been doing it over 30 years, okay? You've got to figure out, are you a day trader? Are you a swing trader? Are you an investor, which is a longer time period? And then create algos that enhance your success. So let me give you an example directly off of our desk this week. We have what we call the risk monitor. What we're looking for here, we use algorithms designed for 10 index ETFs, all the big indexes that matter. And when these 10 speak in unison, that confluence gives us an algorithmic execution point for swing trading. And we simply call that risk monitor red, green, or yellow. You can figure out those colors, all right? So we're trying to make it simple, but we're taking the algorithms that took over a decade to write, right, and optimize and crunch and do all those things, and we're putting it into a bow and saying, here's the risk monitor. It's pretty easy to understand, red, green, or yellow. It's a swing trading algo. So what happened on Wednesday, and we can take a quick look at the market here and take a look at what happened Wednesday, just to put this in perspective for you. All right. Take a look at that right there. I'm going to take this off for a second. So we have this is the S&P 500. This is the ETF, the S&P 500. There was the selling on Wednesday, and that took us out of a swing trade we've been in since right about back here, okay? And then there's a reversal, a 3-bar reversal, and I'll explain what we did there in a minute. But the point is, this selling here took us out of that entry point. And so what we said to investors, if you go to our website, this is the ARMR report, ARMR Investing Way, and these are all the tabs for subscribers. And right here is the risk monitor. So on this day, we add to the risk monitor, we say, okay, now it's red, right? These are all the indexes we're using. And then here's what I want you to see. Current risk posture is red. But what we highlighted right here is how to use the information as an investor, as a swing trader, as a day trader. And this is the point I wanted to make. Figure out the type of investor you are and then use algos. I mean, you're going to do it yourself and you're going to algorithmically trade. That's what you're trying to do. You're a do-it-yourself algo trader. Okay. But what does that mean? When you create your algo, figure out how to use it, that information, depending on the type of investor you want to be. So as we wrote in this note on Wednesday, if you're an investor, risk monitor turns red. What do? It doesn't mean you have to sell everything that day. You're not a swing trader. You're an investor. And investors usually, we discuss, wait for weekly candles. So you get your signal during the week and you see where you are at the end of the week and then you execute. Well, so we take ourselves to this picture of the stock market and we can see for investors last week, you make it through the shakeout and you come out the other side smelling like roses. And the purpose of me showing you this execution, this is the thought I want for anybody who's trying to be a do-it-yourself algo trader. Algorithms are just a piece of information, and then you decide how to use it to execute your strategy. So for a swing trader, boom, you're out. You just booked a profit. That was the stop. For an investor, you say, well, I'm going to wait till Friday, see where we're at. You understand you might lose more money in a bear market. You're going to lose some more money because it's going to go down. But In a different type of market like this one, market goes and tests the highs, you haven't touched your positions yet. And then you can raise all your stops to the low of that shakeout bar. Okay, so that's the different ways to use algorithms. So if you're going to be a do-it-yourself investor, start by understanding what type of strategy you want to build and the type of investor you are, so that that there's a complement with the algorithm. All right. And then here I'm just going to share with you. So taking it a step further, what does the swing trader then do with that information? You get shaken out theoretically, but you really booked a profit from your entry point. So how do you execute coming out of that? Well, here's the day trading tool, right? There's day trading algos and swing trading algos. Let me show you what I'm talking about. A swing trading algo, right here, is a 60-minute bar chart for us. So we use 60 minutes to build swing trading algos. We use 60-minute time frames. Each bar is 60 minutes. All right. Now we have, thousands of lines of code, but here are 4 different indicators we use. And what we do is write code for each to infuse it with volatility components. That's our own secret sauce, so to speak. And then how do they all work in unison? This is the commodity channel index. This is the DMI, directional movement, a couple of different stochastics. You can use literally any technical indicators that work for you. Just figure out how to make them sing in harmony and create a strategy that's successful through back testing and optimization. All right. So the swing strategy here on just the S&P, written this way, this particular strategy, we have many, but this particular one is still long the S&P. You see, it never got stopped out, as it has a much more lenient stop. This is a 60-minute, but let's dive into the day trading algo. So now you're looking at a screen with a lot of lines on it, different type of algorithm, right? This is a day trading algorithm. We call it the price movement profiler. What you're looking to do here is, I like to stack algorithms on top of each other as a portfolio manager. Okay. So the investor gets the risk monitor red signal, or your algo, whatever you've come up with. You're a do-it-yourself algo trader, and you've come up with a strategy. Okay. You get your strategy, it gives you information. Now, how do you want to use it? If you're an investor, in this case, you make it through the week, you haven't changed your portfolio. Swing trader, you're out. So in theory, the swing trader then starts to apply day trading algos to figure out, when do I want to get long the market again? And here's an example of what we called out on the desk. So this is the S&P, the NASDAQ, small cap, and the Dow. These are the 4 indexes, the big indexes we use for direction when it comes to day trading. So what I'm going to show you right here is a trade that we called out on the desk early in the morning. This is the S&P, but I want you to see it on every index. And as you want to apply different time frames of algorithms and stack them on each other for best results. If you can remember, if you can keep yourself focused on what you're doing, and you're saying, I was just on a swing trade that got stopped out. If it gets rescued, I want to get day trades on, so that if we see that rescue and it's a shakeout, I'm back into my position. Okay. So now we focus on day trade. You'll see here, we called this out on the desk as it was happening, a gap and go day, which is very rare, but when they work huge. So it gapped up here. This was Thursday, right? And there's the green bar of our buy signal right there and right there on the NASDAQ 100. And then a little bit later on the Dow and the small caps, they showed up with a buy signal a little bit later in the day. And we can look at the NASDAQ 100 as our guide, as that was the biggest gain of the day. Okay. So what we're looking for here on a day trade, and we have a day trading algo set up with our day trading playbook. And this play, so again, on our website, but you'll create your own list. And I really suggest you do this. Build a playbook of your biggest successes. The market can only express itself in so many ways every day. The faster you identify what's happening, the better of a trader you'll be. Okay. So when you have a day like this, and the reason I highlighted this on our desk on Thursday is I said to our traders, guys, This is right out of the ARMR day trading playbook. It's called Gap and Go. It doesn't work it's rare. When it works big. So depending on the type of trader you want to be and the amount of risk you're willing to take, okay, you're going to be on this trade on the NASDAQ right there on that bar. The low of the day is the stop. And the big question here is reward to risk. This is a low probability trade, but when it works big. If your risk is only the opening range low and you're buying it right here, not a lot of risk, and the reward's huge when it pays off. And you can see the NASDAQ's up big. All right, so what do we do with that information? We layer on top of that. And this is my last thought for you. And this is key if you're going to be a do-it-yourself algo trader. Don't allow mission creep. Don't allow it. Let me explain. We started this conversation off as a do-it-yourself investor using Algos, and I said to you, look, figure out the time frames you want to focus on. So next step is how do those algos help you as an investor? Are you an investor, swing trader, a day trader? Figure that out first before you ever start building your algo. Okay? Then layer on top the algos. Look at day trading algos in conjunction with your swing trading setups. But this is the last piece of information I want to share with you today. And if you take nothing else away from this conversation, please take this away. Don't allow mission creep. If you are a day trader and you're writing day trading algos and you're real good at that, then you're cash at the end of the day. Okay? You're cash at the end of the day. I don't care how good that day was on Thursday, you banked out. And when I see individuals who are beginning, they want to do it yourself, algo day trade, algo trading, and they want to do it on their own. And what I see them do as a major pitfall is they'll put that trade on, they'll have a huge day, and then they'll determine that they're investors. Oh, geez, now I'm a swing trader. And then they give it all away and they get very frustrated and they think there's something wrong with their day trading strategy. There isn't. The strategy works. It's that you allow mission creep. So don't do that. Figure out the type of investor you are. Let's say you're a swing trader. You use the day trading entry point. You do hold it overnight because that's the type of trader you are. That's the investor you are. Okay? So those are my thoughts for you on do-it-yourself algo trading. I hope you found this helpful. I look forward to seeing you all on Twitter. You can follow me at Brett Rosenthal if you'd like to chat. Happy to do that. I'll see you next week for another video. And what I would leave you with on this day, this thought, is always remember that you are the smart money. Okay? That's my thought for you on the way out of all these conversations. Be the smart money. Think for yourself. Stop listening to the noise around you. And if I can help you do that, then I'm happy to. All right. You guys have a great weekend. Hey guys.